Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that sounds like you, welcome or welcome back to my channel. I do have almost 400 quick videos specifically for beginners. So if you're struggling with anything like candlesticks, market structure, or entry points, I'm pretty sure you can find something. And if you can't, just make sure that you leave a comment down below and I will add your video suggestion to the queue. Now, in today's quick video, we're going to be talking about this huge move that gold made to the upside. It was definitely on a bull run, and it's only Monday. I'm going to show you guys my thought process of me getting into this gold trade, and we're going to see how it played out. I do like to journal my trades, and I just like to post it on YouTube so that it can help you guys learn as well. And gold actually broke 3,000. Now, this is something that people have been talking about for a while, but to see it actually happen and to be in that move definitely was amazing. And it was historic, actually, as gold reached that all-time high. Now, I do like to do trade breakdowns on my channel where I do an in-depth analysis on the trade I took for the week, and I share it with some students that I am mentoring. Now, if you are curious, I do like to mentor a small group of people every year just to work with them one-on-one and to help them become better traders. But if you want more information about that, it's down below in the description box. But today, let's talk about this gold trade. So as you'll notice, if you've been on my channel for some time, I have refined my strategy. I've made it simpler and simpler. And ultimately, it still comes down to support and resistance. So we are still going to be using the stochastic in our analysis, but we're going to focus more so on price action, support and resistance than any other indicator. So I posted this trade in the chat for my students. It said next gold high is between 3,001 and 3,005. And I actually think it'll get to around 3,016 before a big pullback to 2,949. I encourage my students to look for buy limit and buy stop opportunities, which are type of pending orders for a bullish market. Now I'm going to break down what I was looking at when I recommended this trade for a buy. And I'm also going to show you guys how I chose these levels and what actually happened in this trade. So let's just go back a bit so I can show you guys the time at which this trade was posted, which was about 10:15 a.m. Eastern Standard Time. And I like to have the timestamps because it's so easy to go back and modify a trade or to see what happened in the market after the move has been done. But I like to hold myself accountable by always posting my screenshots when I'm sharing trades with my students. And again, all of my trade videos are like this. So the first thing that I like to do is I have on my session breaks, right, guys? And my session breaks are these lines here. Now, I like to use my session breaks because it helps me to see on a smaller time frame the previous day's high and the previous day's low. Now, that's going to be extremely important because, as I've said in a lot of my videos, what happens at this area determines which way the market is going to go, or it influences which way the market is going to go. So, if you have a previous day's low, right, and you have a previous day's high, the market can do one of four things once it reaches this area. It can reject the previous day's high, and that will be a sign to sell if it's in conjunction with confirmation on the stochastic, or it could break above. Let's just drag this line all the way over, or it could break above the previous day's high and it could continue to buy. Once it gets to the previous day's low, it can come back down and it can bounce up, or it can break below the previous day's low and it can come down. So that's something that I'm always looking out for. What is the market doing in regards to the previous day's high or the previous day's low? Now, if you don't happen to see a trending market like this, and trending just means the market is clearly going one way. We can see for this stretch of time, the market was going up, and then we hit a period of consolidation. Consolidation simply means the market is moving sideways and is no longer super trending. So we can see that that's what happened here. Now, the same thing happens in a consolidated market when you're looking for the high and a low, because that's what we're working off of. In this case, the previous day's high and the previous day's low left us in a bit of consolidation. So this is the ultimate time to be patient. Whenever the market is consolidating, I don't rush. I literally wait for my break of structure and my retest at the new level. And that's exactly what it sounds like. If the market breaks above this high, that's an opportunity to buy. But we don't just want to wait for the break. We want to wait for the break and retest to confirm that the market really wants to go in that direction. Now, if the market were to break below the previous day's low, that would be a sell opportunity. Or it could just come back to this level and buy again, as we see it's been doing for a couple of hours. So that's what I'm looking for at this point. I'm waiting for the break of structure above the previous day's high, or I'm waiting for the rejection so I can have the confidence of which way to take my trade. Now, the stochastic is my favorite indicator, and these are the confirmations that I look for. For a buy, I'm looking for the stochastic to be facing up because that just also reflects that the market is going up. I'm also looking for that blue line or that fast line to be above that orange or slow line. And I'm looking for a cross above 20, 50, or 80. And I can see that I have my above 50 cross here and my above 80, and we're approaching 50. So we're just going to wait, right? And how I got 3,005 was that was the highest high, right? That was the previous day's high and the previous all-time high for gold. So I knew that if gold got above that level, there was a high chance that it would continue to go up. So let's put our support and resistance lines back, because when I put those lines on my chart, I'm literally just looking for highs and lows, right? I'm looking for highs and lows, and highs, right? Because these are the levels that I'm going to target. For a sell, I will be targeting this area. And for a buy, because this is an all-time level, I don't really know which way the market is going to go, but based on previous chart history, I just decided to set my TP around 3016 to see how it will play out. So I'm actually going to put my lines back, right? And we're going to go back down to the smaller time frame. And we're going to see how this trade actually played out. And I want you guys to pay attention to that break and retest of the previous day's high, right? At 3005. So here we go. Wait, let's actually get in for a buy, right? Because this is a demo trade. We are going to set our stop loss below a previous low. I believe we started here. And we're just going to let the market rock out, right? And see if it actually gets to our levels. So we can see that the market dropped down a bit. It started to consolidate and then it continued to push up. We are waiting to see if it hits that 3001 price area, which we know it does because, again, gold has hit another all-time high. So my first take profit was hit. Now, I've gotten in the habit of trailing my stop loss, which means that as the market moves in my favor, I'm just going to continue to use these previous areas of support to trail my stop loss, right? And to trail your stop loss means as the market moves in your favor, your stop loss should be increasing as well. And eventually, you should be able to move your stop loss into profit, making this a risk-free trade. So as we can see, we closed the trade at about $80.10 in this simulated example, although the market did continue to push up. So as we can see, once the market actually broke above, and let's just actually go back to that point right there, right? Once the market broke above that previous day's high and then did a retest, it continued to buy. And I just want to show you guys that. So this is the previous day's high. We get the break above the previous day's high, and then we get the retest. Main price broke above that level and then came back down to test that level for support and then continued to go up. So this trade was profitable. Although I wasn't able to capitalize on the entire move, I was able to secure a decent amount of profits just by trusting my strategy and analysis and not being afraid to just let the market go and trail my stop loss. One thing that Tom Hubert said in The Best Loser Wins is that you can't really control your reward. All you can do is manage your risk. So that's what I've been focused on. I really hope that this video was helpful and simple enough for you guys to understand as a beginner or even as an intermediate trader who's trying to level up your game. These are things that I look for, and it's helped me become more profitable over time because it really wasn't always like this. I've lost a lot of money. I've lost a lot of trades. But once I found a system that actually worked, I just focused on repetition and consistency because practice makes profit. No one will ever be a perfect trader. But I really hope that this video was helpful. If you guys have any questions, you can drop them down below in the comment section, and I would love, love, love to help you. But that's really all I have for you guys today. Until next time, returns.